Hey guys, welcome back to my channel. This is part 5 of my home buying series. I might have gotten that number wrong, but just bear with me. Today we're going to talk about the appraisal, getting your appraisal ordered, and what even is an appraisal. I'm going to talk about all that in today's video. So the appraisal comes after the pre-qualification, after the pre-approval, after submitting your offer, after getting your inspection done is the appraisal. And essentially what the appraisal is a report ordered by the lender that's looking to loan you whatever your mortgage amount is. They want to make sure that their asset is secured just as well as you want to make sure your asset is secured. It's very similar to ordering an inspection on the property. However, the appraisal is very specific to the bank's needs. So they want to make sure that they're lending you money on a property that is lendable. And the way that they do this is essentially they will get comparable homes in the area. So for example, if you're buying a 3-bedroom, 2-bathroom house, they will look at other 3-bedroom, 2-bathroom homes within 20% of the square footage of your property. So let's say that your property is 1,000 square foot. They will not go over 1,200 square feet and they will not go under 800 square feet. They're looking at properties that are comparable to your house. They also may even go a little bit further into looking into the years the homes were built. It would make sense to me that they would look at homes that not only meet your bedroom, bathroom, square footage, as well as your year built. I would look into things that were probably built within, 10 years of each other, for example. But I could be completely wrong, and they may have some sort of metric that they use, but that's that. So an appraisal is essentially the bank's inspection on the property. The appraiser is hired by the bank. Usually it's a third-party company that will come out and appraise the property for you because of everything that happened back in 2008 where banks were actually sending their own employees or their own people out to do appraisals and appraising homes way above or below value just to get that loan funded. That was a lot of sketchy things going on. So now regulation has come in and they're saying that the banks have to hire third-party appraisers. There still may be some fishy things going on. However, that's between the banks and their appraisers. What I will say is that you want to make sure going back into the offer stage that you don't submit an offer that may not even get appraised, the property may not even get appraised for. And again, this is a conversation that you have between your agent and yourself to make sure that this doesn't happen, because this appraisal determines whether or not the bank will even give you the money to purchase the home. Let's say the appraisal comes back in below what you've offered for the property, you have to cover that difference. Let's say the bank is only willing to offer you 90% of the loan or 95% depending on the loan product that you applied for, and the property comes in $10,000 below what you've offered. You have to cover that $10,000 when it comes to closing because the house didn't appraise for that much. Luckily, if you're watching this video within a few months of me posting it, you're in a pretty good market where homes are getting appraised way above value. This is a good thing for you as the buyer of a property because you can pretty much ensure yourself that no matter what I offer within reason, this home is going to appraise for this value. You also want to keep in mind your loan type. So whether or not you're FHA or conventional, there are a few things that go into this appraisal that you might want to look out for, and I'll go into that in later videos. But just an overview of what an appraisal is. It's the bank's inspection on the property to make sure that their loan that they're giving you is secured by something that's solid and something that they say it is on paper. Because at the end of the day, all this bank is going to do is take the mortgage that they've given you and sell it to someone else. So they want to make sure that when they sell the mortgage off, that the asset is legit. All you do is you will communicate with your lender that you're ready to order the appraisal. They'll kind of press you on the timeline because you do have an appraisal contingency as well. If you've opted into that from the offer agreement, you have an appraisal contingency and the lender will communicate with you. So this is the lender, aka your bank or your credit union or your broker, will say, hey, it's time to order the appraisal. We have X amount of days, and given the timeline that I had when I ordered my appraisal, it was about 2 weeks to get an appraiser out there. So you want to make sure you order that as soon as you get your inspection in and as soon as the seller agrees to make any necessary repairs to your property. The appraisal will run you about, $600 to $800 depending on the size of the property, and it is typically credited back to you. So yes, you put the money in up front. However, when you go to the closing table, you'll see it most likely as a credit to you, meaning they have given you back that money upon closing. I hope this video was helpful for you or anyone looking to buy a home. If you have any questions, please be sure to comment down below and stick around for later videos where I go into more detail for future steps of this process. Thank you.